Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. And if you remember in last week Friday we discussed about is markets headed for a reversal, and Nifty has moved precisely the way it was expected. Price have been following time cycles extremely well, and as well as even the wave counts has worked out precisely. So you might appreciate now that in last week's video we clearly discussed about why the uptrend is probably not strong enough. We were already seeing series of negative divergences on indicator. We discussed about time cycles, and we also mentioned very strongly that is Nifty headed for a reversal. You cannot miss it this time. So the reason for such a strong conviction was not only using advanced technical analysis like Elliott wave or Neo wave, but also combining those techniques together along with time cycles, which helped us to understand that since the time cycles are in the topping zone, we cannot expect a very sharp rally to continue. And that is how Nifty moved, and market obliged by probably giving a sell-off. Even though it is not very severe, but there has been definitely correction from 9,700 levels to below 9,500, and in today's session it did touch even 9450, 9440 levels. So that clearly indicates that the trend which was ongoing from 7,900 towards the highs of 9,600 and odd levels. So those 9,700, sorry. So the entire trend is probably over, and the next leg has started on the downside. What is missing right now in the trend is still a strong momentum, which we have not seen. This is because the pattern which is developing after completion of 9,700 on the downside is probably a diametric pattern. Now, diametric is a very tricky pattern, which is defined as per the advanced Elliott wave, which is Neo wave, and it is a 7-leg correction. And each of the corrective legs, which are A, B, C, D, E, F, G, is how it is labeled, moves in the direction on the downside over here, and then the retracement is very short and fast. So even in on the expiry day, if you look at market, there was a very sharp retracement on the opening, but the entire gains were given away by the closing hour. Similarly, in today's session, market went down, but by the closing hour, there was a pullback on the upside. So such kind of a typical behavior in the movement is because of the diametric pattern. And that is why I very clearly mentioned in the research report as well that you have to look at the closing hour, and you need to look at prices based on the channel and whether the previous resistance is taken out or not. Unless that is not taken out, the markets are going to be sell on rallies, and it has worked out. Trust me, it has worked out brilliantly so far. The pattern is clear, the time cycles are clear, and the channels have been broken. So everything, each and every movement has been as per what the expected pattern, and the internal counts of those patterns can be referred into the daily research report, daily equity research report. So today, let me again share across with you the daily chart of Nifty and try to gauge what's happening. So I'll open up the website wavestrategy.com. You can also plot your charts from the website. So this is the website. You can plot the charts by going to the chart section here, and you will be able to see the Nifty daily chart. You can zoom in, zoom out in order to understand how the stocks have been doing. Also, what I have done is over here, there are the main indices. If you click on those indices, you can even see what is happening with mid-cap stocks, what is mid-cap index, what is happening with small cap. So these are very important intermarket linkages that you can do by looking at probably Dow Jones, how Dow Jones behaved, and there was a serious capitulation which we saw in yesterday's session. So these things is going to assist in for timing the market, because if a global selling starts, then the strong trend will emerge. But if the global markets continue to drift higher and Nifty is falling, then that trend can be with an overlapping fashion, is what you can understand. So looking at this chart, if you today's data is not there, but even if you look at this chart, you can see that for the first time, like we discussed in the previous day session as well, previous week session as well, for the first time, Nifty has probably given a very decisive break below the trendline support. Now this is a very important information, because this is the trend line which was connecting the previous pattern. So if you get hold of the equity daily research report, you will understand the internal counts. And if you look at this, the internal counts, the trend line was very important, and that is taken out in faster time, which confirms that the pattern probably which started from 9,000 7,900 level is probably over now. The next confirmation will be on the break of this low, which will happen after the complete retracement happens of this low. So that will be the second stage of confirmation that a very important top is formed from medium term perspective. I do not want to be too pessimistic as of now, because given the fact that we are now on the 50th day of the cycle, and this is a 55-day cycle, so the selling pressure is going to be there for next 5 to 6 days on the markets. And these 5 to 6 days, it can be either on the sideways side or it can be on the downside. So that is a very, very vital information, which means that any release is going to be used as a shorting opportunity, is what I have been telling since a week, and I am telling even now, because of the time cycle concept. Over here, you can clearly see the channels have been broken, and this movement has happened on the back of series of negative divergence that I showed in the previous session. So now let's again go back to an hourly chart of Nifty and try to understand if that hourly chart is making any sense and what can we make out of it from a short-term trading perspective. So let me open up my screen. This is the daily chart again. The channels are broken. These are the time cycles over here mentioned. So let me go to an hourly chart. If you look at this hourly chart of Nifty, and let me just delete this cycle line which is here right now. Okay, now this hourly chart of Nifty clearly shows that for the first time we are seeing a very decisive lower high and a lower low formation. Now this is a classical concept based on Dow theory. A lower high and a lower low indicates that the trend is on the downside. So unless and until I see a decisive break above this high followed by this high, I think the best strategy to adopt is going to be selling on rallies. Okay, and at the same time, if you look at RSI has, for the first time in the entire trend, you will see that RSI doesn't very often move toward the oversold zone, which is near around 20. This is for the first time. If you look at RSI, it has managed to go towards the level which was not seen before. So this is a very, very subtle observation. Looking at RSI, it indicates that the market dynamics are probably changing, and that is why you are seeing RSI going to an extreme level which was not seen in the previous weeks or months. And this trend is therefore a bigger degree trend compared to the prior corrections. This is what I can make out right now. And looking at the overall structure, I think this entire down move can be also in the form of a diametric pattern. The internal counts of this down move will be revealed in the daily financial research report, and using that pattern you can do a very, very good trade, because that pattern clearly defines how the market should be moving, and time cycles help us to understand when an important low is going to be formed. So we are still few days away from the time cycle low, and that's why the pressure can be there on the markets. And from here, the trading strategy is going to be on the short side itself. Also look at how the stocks have been behaving. The stocks that have been weak are continue to be weak. There have been some stock specific pullback which are happening, but I think those are also temporary, and we are going to be headed for some decent reversal, given that the huge euphoria of GST is now going to be there. So it has been quite many years, I would say maybe 2 years since the GST has been discussed and has been finally getting executed. What normally happens in the market is when there are strong trends which is emerging due to the expectation of certain things to come out. So we are seeing in expectations, the market has rallied. GST, when it was presented and then it was expected and passed, and a lot of things happened. So the market's already discounted all those things, and when those expectations materializes in terms of a reality, market probably tops out. That is how it moves most of the time. So any news or event which are probably rumors, market start discounting those things, and as soon as the news is out and public, it probably forms an important top or a low and reverses. So same thing we can expect now. I mean, GST has been discussed for many months and markets have been discounting all those things, and now when it is going to be a reality, probably it's going to result into some slowdown in the economy, at least for next few months. I think it's going to take time for economy to absorb those taxes which are going to be levied. It's going to take time for people to start getting back on track, move out the uncertainties. There is definitely some uncertainties which are prevailing even now, and market doesn't like uncertainty. So during uncertain times, market tries to correct, and that is what we are expecting. So this can be the phase for next 2 to 3 months, and eventually then the market might settle down and things should start picking up. Detailed explanation will be given in the upcoming monthly update about medium-term outlook and short-term update in the financial waves short-term research report. And I think this is what the strategy should be followed even now, which is sell on rallies. And before I close on for the day, again, an important announcement. There is a training on 29th and 30th of July, where I'll be talking about these important concepts of Elliott wave, Neo wave, which is advanced Elliott wave, and time cycles. I'll be using Hurst as well as Gann time cycles in order to time the market, and I'll be combining those techniques together with Neo wave, and that is how the entire prediction was done for this top, and it has worked out brilliantly. So I'll be discussing those same techniques which I use practically on day-to-day basis on how to trade markets using those concepts. Also, an important announcement is I keep getting a lot of questions from users post the training if they have doubts or queries. So trust me, if you have any doubts or queries post training, you can drop me an email or post it on our traders forum at wavesstrategy.com, and I'll be more than happy to address them, address the queries, and I'll ensure that you learn the concepts that we will be discussing in these 2 days of training seminar. That's it from my side for today, and hope you like the session. See you again soon next week, and have a wonderful weekend. Thank you.